Well, taking a look at some top stories this hour, Zambian April inflation falling to 6.5%. That's from 6.6% the previous month. The slowdown mainly due to decreases in prices of some non-food items. So let's unpack these numbers now. We've got Noel Nkomo, CEO at Better Finance Company, joining us on the line. Noel, thanks for joining us. So firstly, just take us through some of the drivers of the decrease in inflation, because non-food items is what came to the fore this time around. Seems to be having a problem with that line. Noel, can you hear me? Well, I think Noel is back on the line. Noel, if you can hear me, just hoping that
yes,
you can...
I can hear you now. Thank you.
Great. If you could just run through the numbers that we saw coming through from inflation, for inflation rather, 6.5% for the month of April, a downward momentum in the inflation price there from 6.6%. So what drove that this time around?
Well, yes, indeed, the figures that have been released by the Central Statistics Office indicate that there is a 0.1% decline in the rate of inflation, I think, which basically could be attributed to the fact that the government has more or less stabilized the food prices by being able to put a cap in terms of how much the staple food, which is basically the major staple food in terms of maize, can be able to sell. And also they've been able to cushion the impact in terms of the rising oil prices by being able to subsidize the increase through government coffers. So I think that has been able to keep the cost of production low, and consequently the cost of food and other goods and services under control.
Let's take a look at that, and government, of course, subsidizing higher fuel prices, because we saw this, the deficit or surplus, trade surplus figures coming through, and 307.2 billion kwacha is what that surplus was in March, and that's substantially up from 133.2 billion in the month of February. So talk to us about your view on the trade data that we've seen coming through, because that surplus continues to widen, yet you've got a copper price which is under pressure below $7,000 a ton, and of course fears of a supply glut this year globally.
Well, yes, indeed. I think what we are seeing now is a situation where copper has been the main driver in terms of the export, or traditional export, so to speak, and in the process being able to boost our trade surpluses. But I think what has also happened is the fact that Zambia, having registered 4 years in a row in terms of surplus maize production, has been able to export most of it into Angola, into Congo DR, as well as Zimbabwe. So that has really helped to be able to support the growth that you are seeing in the trade surplus.
So they're growing trade within the region, and do you see that as something that will continue when it comes to reliance on more regional players as opposed to outside of Africa?
Yes, I think that is going to be a major priority area for the government going forward, for the simple reason that we've realized that with the difficulties that are being experienced in Zimbabwe now, which has traditionally been the major food basket for the region, Zambia has taken advantage of that and trying as much as possible to pump in more investment into agriculture and ensure that out of Zambia we should be able to support to export our surplus in terms of grain and other products into the regional economies. For example, I know that government is trying very hard to be able to open up, the Angola market through Solwezi, the Beira line, to be able to again get a market for the Zambian products in terms of agriculture into Angola.